Hey everybody, this is Ryan Mallory with SharePointer.com's Swing Trade in the Stock Market. In today's episode, we're going to talk about whether you should be trading just one stock. Is that a good strategy just to narrow your focus towards one stock and one stock only? Or should you really have more of a broader view of the stock market and trade multiple stocks? I mean, for me personally, I trade a ton of different stocks. So we're going to talk about that here today in this episode. And in today's email, we got a guy, he asked to be called Jimmy from South Carolina. And Jimmy from South Carolina writes, "Hey Ryan, this is Jimmy from South Carolina. Feel free to use that as a redneck name if you want." I am. "Can you give me a suggestion of how you would trade on a $50,000 IRA account? I have been dabbling with some swing trading and day trading as well on Fidelity. I mainly trade Berkshire Hathaway for the past year, but I got out of it after it dropped with Warren Buffett's announced retirement. Lately, I have been trying to day trade TQQQ and most recently QQQ." And then he says, yeah, I guess that probably means it hasn't been the best for him. "I've had mixed success, sometimes making money and most of the time getting stopped out. Anyways, I was just wondering, what is your advice for me and what it would be? I'm looking for another good stock to trade to take Berkshire's place since it has been struggling for the past 2 months. Thanks a lot, Jimmy from South Kakalaki." Now, he should have said Jimmy from South Kakalaki instead of Jimmy from South Carolina. I like South Kakalaki. Not sure if that has some kind of connotation for South Carolinians, but anyways, he says, "P.S. I have really gotten a lot out of your videos and podcasts, and I appreciate your advice." Okay, so there's a lot to unpack here. He's asking about his IRA account, how would you trade it? But really the main focus here is just trading one stock. And is it something that I think that people should do? Not really. And there's a lot of reasons for that. One, you're going to have a lot of dull moments. If you're going to hold yourself to high standards when it comes to taking good trade setups, there's going to be a lot of moments where you're not trading at all. And so there's going to be a lot of missed opportunities that you could have had in other stocks as well. And focusing on just one stock, and I think it's kind of amazing that he focused on Berkshire Hathaway of all stocks. I don't think I've actually ever traded Berkshire Hathaway, much less made it my one and only stock. So kudos to him. I don't know how he did it, but Berkshire Hathaway Class A shares, that trades for $709,000. I'm assuming that's not what he was day trading. I'm assuming it was the Class B shares at $473, which is a little bit more realistic, especially with a $50,000 account. You can't even trade a $700,000 stock. So you're not always going to have trading opportunities in a stock. There's a bull market right now ongoing, but that doesn't necessarily mean every stock is setting up to trade. So you may have a bull market that's ongoing, but you don't have a good opportunity to take on. And there's a lot of stocks that don't participate in the bull market. If you look at the bull market that we're in right now, only 40% of the stocks are trading above their 200-day moving average. So that means 60% of the stocks are really not keeping up with this overall market. So if you were trading just one stock, there's a 60% chance, just on a numbers basis here, that stock is not participating in the rally. And in case of Berkshire Hathaway, it's not. It's been dropping for the past few months. It's below its 200-day moving average even. And you take Apple. Apple's a perfect example. I'm actually in the stock right now. I got long on it, I want to say about a week and a half ago. Last week, we'll just say. It has done nothing. I mean, it was setting up for a breakout. It looked really good, but since breaking out, it's just traded sideways. It's like it breaks out and then it gets into more consolidation. Now, if that was the only stock that I was trading for a long time, that was the only stock that a lot of people traded. For me, I've always traded multiple stocks. I really will trade anything over $10 a share as long as it's setting up well and it has a good reward risk ratio and it's not a stock that has heavy headline risk to it. I'll trade it. But if I was just trading on Apple, that would be a totally different situation. I mean, that's one, I would say, over the past year or so, when the stock market's going up and Nvidia's rising and Microsoft's going up, this one tends to struggle. And when those are going down, it tends to almost be like a contrarian stock or a flight to safety. That Apple would not be the one that I would want to give myself to only be trading. And it's the same thing with Berkshire Hathaway or I wouldn't do that with Nvidia, because there's going to be times where Nvidia, not lately, but there's going to be times in the future where Nvidia may not be participating in the market rally. And so you have to keep that in mind when you're just trading one stock. That's not necessarily the stock that's always going to be participating when the market's bullish. The other thing that I would say is that it forces you to take a trade setup, not the trade setup. What do I mean, and what's the difference there? A trade setup is essentially, if you, let's say again, you're trading Apple. Okay, that's probably the best one everybody knows about Apple, and you get a trade setup. You're going to take it not because it's a great trade setup or it's the best trade setup available that you can find. It's just a trade setup. Oh, the stock's trading. This is the only stock I trade. It's a setup. I got to take it. It may not be a good setup. It may be a bull flag in a bear market. Well, is that really a good one? No. It'd probably be better to take a bear flag in a bear market. And so that's what happens when you're trading a stock. It forces you to take trades that may not be in your best interest because it's just simply a trade setup. What I'd rather do is do the trade setup. I want the best trade that I can find. I want to find the stock that's following the market's lead, that's in a strong sector, that's moving the market, and I want to be in the industry that's pushing the sectors higher. That's my top-down trading strategy. And the top-down trading strategy is actually a course that I have where I outline essentially everything that I know about trading over the past 30 years. Yes, this is a plug for my course, but I'd be remiss if I didn't tell you about it because I think it's a great way for you to learn how to trade stocks, especially if you're starting off and you just don't really have that success yet and you're trying to find out how can you experience success in the stock market. My self-made trader course at sharepointer.com will teach you exactly how. It's over 25 hours of instructional videos, over 100 modules that I'm going to teach you everything that I know. So check that out, sharepointer.com. Now, that's how I trade. I don't just trade one stock. I trade a variety of stocks. I was looking at my portfolio today and just like the number of swing trades that I have going on right now and how many of them is the first time I've traded those particular stocks this year. And so there's a number of stocks that I'll only trade once a year. And there's a lot of stocks that I won't trade at all. There's times where I trade stocks for the first time ever. And that's just part of the swing trading. I'm trying to find the best setup that I can take. And if it's in a stock that I've never traded or a stock that I've traded for the 500th time, I don't care as long as it's the trade setup, not just a trade setup. So the dull moments, they'll lead you to taking just mediocre trade setups a lot of times instead of the best kind of trade setups. Also, it becomes personal when the stock doesn't do what you expect it to do. For me, trading a lot of different stocks, if the stock doesn't work, I don't really care. Okay, there's another trade. It's on to the next trade. But when you trade that same stock over and over and over again, it starts to become a little bit personal. You almost feel like that stock's your own company in some ways and in the way that you react to what it does. And so when it does something that you don't expect, you almost start to take it personal. And that's what you don't want to do in trading because then that starts to lead to revenge trading. That starts to leading to doubling down, ignoring stop losses because you know this stock. This is my stock. And that's just not what you want to do. It also will lead you to taking arbitrary numbers. I met this guy. I enjoy cruising with my wife because living on the Space Coast, we have easy access to a port. And so we'll sometimes go to these weekend cruises. That's usually our favorite thing. We can relax over the weekend and be back before the opening bell on Monday. We sat next to this couple. Well, I shouldn't say sat next to them, but they were like one table over. And the guy was asking what I did for a living, and I had the opportunity to tell him what I did. I did a podcast, and then naturally, it always talks about it. It always leads to what they're trading almost every time. It's a great conversation starter when you tell them that you have a podcast that talks about how to trade stocks in the stock market. And so he was telling me about how he actually trades Royal Caribbean. He's like, my wife and I, we go on these cruises once a month. And actually, I think he said every other week, which I feel like that's way overkill. He knew the waiters and everything. He goes on the same ship. And ironically, he trades Royal Caribbean. That's like his stock. And he was telling me that, I trade it every time at $40 and I sell it at $47. Okay, well, it's like trading at all-time highs. It's blown that way. I think it's like quadrupled since it hit that $40 mark. So just oftentimes you'll say, well, the stock always is hitting this $47 level, and that's where I always sell it, and I wait for it to come back. That's fine, but it's really just an arbitrary number. If you don't really have a reason for it, if you're not, he didn't say anything about, well, that's where key resistance is every time or whatnot. You're just trading just because that's where you've had success at in the past. So that becomes a mental barrier for you, essentially, to buy at this level, sell at that level without any real reason behind it. But now he's talking about, I'm talking about Jimmy from South Kakalaka here. He's talking about how he's dabbling in QQQ and he's not having a lot of success. There's a lot of people that trade the Qs and trade the SPYs, particularly on Wall Street. And you're going up against, especially if you're trading the futures market, which he doesn't indicate here, but if you were trading the futures market, even harder. You're going against some of the best minds, against the best people out there that specialize in this. You're running up against the machines, the algorithms, and it can be very, very frustrating at times. And you can't just go at it with, oh, I'm feeling bullish today. The market's gapping higher. I'm going to go in. Then you're all of a sudden you're chasing after things, and then the market starts to retreat, and then all of a sudden you're bag holding. You got to have a strong back-tested strategy if you're going to try to trade the indices. Can you trade just one ETF? Yeah, you can trade SPY or you can trade IWM or the Qs. I do think that there's a lot of risk that you can take on by trading the inverse ETFs or the leveraged ETFs. I do it, but just a warning. I mean, you're leveraging yourself, not necessarily with your cash, but you're taking on a higher beta. So if you're trading TQQQ, you're doing like a 3 beta of the Qs. So what you want to keep in mind there is that if you're going to try to trade an ETF like one of the indices, you got to make sure that you have a strategy that's been backtested and that that will work. That out of 100 times, it's going to be right X amount of times, and you're going to make X amount of dollars for every Y amount of dollars lost. You also have to think about seasonality. Like we're in the month of July. July is one of the best months in the stock market on a seasonality basis. It's no shocker here that it's up on the month. Now you start to get into August and September, it starts to get a little bit more bearish. In October, even though that there's your greatest market crashes that take place in October doesn't tend to be actually all that bad, especially as you get into like November and December, where seasonally the traders start to pick it up again. But we have to remember that when you're trading just one stock, you're going to be limiting yourself on the opportunities that you take. SPY doesn't have all that great of opportunities. I was asked today about SPY. I was mentioning how SPY was breaking out of a 2-week range today, and I was asked, well, would you buy it here? I'm like, not really, because I don't really think SPY is the best opportunities when it's trading at all-time highs. Not that it can't go higher, but the bandwidth of the market tends to drastically reduce. You're not seeing the kind of moves that you saw off the April lows. You're seeing much more incremental moves here from here on out. It's not going to be big moves, but you can get bigger moves out of the individual stocks. Like for instance, IBIT, which follows Bitcoin, made a really nice trade off of that this past week. I was selling a portion of my gains for over 10%. Well, the market wasn't up 10%, but if you were only trading SPY, you're missing out on some of those other opportunities because you're having to just settle for a setup, not the setup. And if I would have played that breakout on SPY today, that was just a setup, not the setup for me. And finally, what I would say is that I prefer patterns and risk management over an individual stock. There's so many stocks that I pass up on because the risk management isn't there. It's not the right setup. I pass it up because there's not a really good pattern that I can seize upon or a good support level that we can play a bounce off of or a trend line. I prefer the stocks that are actually setting up for me. I don't care what the stocks are as long as it's provided me with an opportunity to trade them. It's the exact opposite if you just limit yourself to one stock or just a couple of stocks. And the reason for that is that you're forcing trades to happen. It's almost like when you're in a desert and you've been starved, you don't have water and you're thirsty, you start to see, these mirages where you think that you're seeing it, and all of a sudden you find yourself just drinking sand. You're not actually drinking water. And that can happen with the stock market. When you're just trading like one or two stocks or just one in particular, you can start seeing trade setups that aren't there because you're so desperate to make a trade. And so what we want to do as traders is not just limit ourselves to one trade. We want to be able to expand our horizons. We want to be able to go after as many good, high quality trades, the trade setups instead of a setup. If you enjoyed this podcast episode, and I hope you did, make sure to leave me a 5-star review on whatever platform you're listening to me on. And if you're watching me on YouTube, make sure to like and subscribe and tell me what you thought of the episode in the comments below. Make sure to send me your questions, Ryan@sharepointer.com. I read them, I use them, This person sent me this question just earlier this week. Now it's a podcast episode. I appreciate it when you guys reach out to me and tell me your questions, tell me your concerns. More than likely, you will get a podcast episode. Not enough people actually write the show. And check out SharePlanner.com and specifically check out the Self-Made Trader. I think it's a course that you'll really like and benefit from. Thank you guys, and God bless.